Well, hello, Maverick traders. Welcome back to your market roundup for June 28th, 2022. Corey here with you. Excited to be back with you. I had been fighting a little bit of illness for the last couple of weeks and just feel great. Excited to be back a little bit more heavily involved in the markets. As always, a quick reminder to make sure you follow your trading plan, and as has been the case in 2022, plenty to talk about. So today we had a big drop in the markets, a couple of percent across the board. NASDAQ really the underperformer, down 3%. Oil still kind of hanging in there, up 2%. You'll see from our heat map, that was really the pocket of strength today. Energy stocks had come off quite a bit, and now they're seeing a bounce back and recovery. The news today, consumer confidence continues to disappoint. 98.7 versus 100 expected. Remember, that's not a percentage. That's a big miss on the consumer number, and it's not to say that only 98.7% are satisfied. No, that's not what it reads. Actually, consumer confidence numbers are down in the dumps, the lowest readings we've been seeing in many, many years, which kind of speaks to how people feel about how high food and energy prices are. Those are the two big inflationary factors. But interestingly enough, as you look at charts of commodities, of asset prices, of things that are happening, there's a big rollover that's taken place. It's not everywhere. Oil hasn't had as big a drop, but I mean, lumber's down 50%, and all these commodities have really come off. So have we kind of seen peak inflation, at least in those areas? Well, that's the tricky part. Inflation is kind of commodity by commodity, area by area. Some things can be inflating while others are deflating. So right now, the problem is that the things that the consumers spend the most money on are sticky. Markets are definitely nervous. We're in a bear market, 78% below the 50. 3/4 of all stocks falling today. As you look at this S&P chart, you've got to kind of zoom in here, and we got these big, ugly, bearish candlestick patterns, right? A lot of bearish engulfings today, a lot of deterioration. And you'd have to kind of look at this and say, I'm in one of two camps. Either I'm in camp A, which is we're in a downtrend and this thing is about to break and away we go to the downside, or you're in camp B, which is you think it's going to be a little choppy here and probably going to get a little bit worse, but set a higher low and just kind of be choppy here, maybe another leg to the upside. And I find myself in that camp. That I think what's transpiring is that this is the first leg up, what we would call an ABC style correction. If you think of it in waves, this is the first push higher. And a lot of people kind of miss that. This next drop where everyone goes, uh-oh, here we go again. We're about to decline. We're about to deteriorate. It's actually kind of a dip worth buying. And then you see another leg to the upside. Not unlike this. I mean, it wasn't picturesque, but you can kind of see the essence of what we're talking about. Kind of these three-wave patterns. Or here, you spike, you kind of pull back, and then there's another wave to the upside. So these are pretty traditional, pretty normal. They come in different shapes and sizes, but where do you think we're at? Is it just bon voyage to the downside? Possible. I'd put myself in the second camp, and I taught the trading room this weekend with Darren, and this was kind of my point of emphasis was, look, I'm not ready to pound the table. I think we can go, I think there's room to go a little higher. Actually, today didn't deter me from that. I think this is the way it should act, that this day is somewhat akin to this one, right? It's scary, and it probably has a little bit more decline to go, but ultimately there's another wave of buying that's going to follow it. That would be my instinct. That would be my take on this. So you're going to see a lot of bad price action in today's market, but think about it, kind of dig through and say, okay, well, what could be worth buying? Do I want to take some profits off on my bears as this gets a little worse for a couple of days? If I think that it's going to have that next big whoosh and that next leg down, of course, then you want to be adding bears here. But I'm not, that's not how I did it. I got kind of lucky and did remove some bulls, add some bears yesterday, which really set me up in a better spot for today's reversal because I kind of see this choppiness. I talked about this in the weekend trading room. Maybe you're a little bit more active if you have discretion in your trading plan where you can, kind of make an adjustment here and there. It's not wide sweeping, it's not all in and all out, but just some little tweaks that kind of set you up better for the next leg. And that next leg is now making to the downside. And now I'll kind of adjust into that and set up for the next leg to the upside. That's how I envision it. Large cap tech, really bad. Microsoft, Apple, Google, Amazon, the big names, really bad price action. Energy was the pocket of strength. There were a few individual stock plays, like Qualcomm had some company specific news, but otherwise it's mostly red, right? And then you obviously have that big bright green there in the energy patch. So our weekly outlook coming into this week was a +1. Our monthly outlook still -3. Well, we're in a bear market, right? We're below the 20, we're below the 50, they're downward sloping. The trend is down, but what's the pattern? Maverick did a great class on your table positioning. If you think about it from a poker standpoint, just because you're in a bear market doesn't mean that every day is as good a day to be bearish, right? There's context, and if you're really stretched away from the moving averages and seeing signs of exhaustion down here, this is not a time to ramp up and get mega bearish, right? Or down here, this is not a time to be adding bears like your hair's on fire. Yeah, you're in a downtrend. Yes, it looks ugly, but that's more of a profit taking signal on your bearish trades than it is, hey, add a bunch of bears today. So you got to think about where you're at, what the next wave is, where you're kind of in the poker analogy. What's my table position? What's my area of strength? What's the next risk to reward? Do we want to have a bearish focus for most of this year? Yes. But there's better opportunities than others within that. And that's kind of, I think you could see a little bit more downside. But my personal take is that as we get this little wave of selling, it's probably an opportunity to take a couple of profits on some bears, add a couple of bulls for the next wave, and try to be, not reactive to the market consistently and not always behind. But, my personal take is that I think we're in a little bit of a choppy environment. In a choppy environment, I want to kind of fade a little bit. So as we ramp up, I fade off my bulls. And as we ramp down, I fade off of some bearishness. And as we ramp up, I'll fade off of some bullishness and so forth. Kind of use those strength and weakness periods to kind of adjust to a little bit more of the next wave that I think is coming. Now let's look at some individual names, a few bulls, a few bears. On the bullish side, a little bit of a healthcare overweight, certainly. And on the bearish side, just a mixed picture, I would say. So AbbVie, this is in the healthcare space. This is a stock that I remember highlighting this on the bullish side. It just kept popping up, just kept offering bullish opportunities back here. And this is a prime example of what we would call a stage 4 exhaustion. You can watch the class I did on the 4 stages of a trend, but this is kind of the finishing phase, right? You tend to go kind of parabolic and put a big exclamation point. And at that point, I just didn't want to do anything. I don't want to be bearish. I don't want to be bullish. Just kind of move on. Well, it went through this whole decline, big wipeout phase, turned into a bearish chart for a while, and now I think we've gone full circle where we've basically wiped out a lot of the gains. We've consolidated, we've done all those sorts of things, and we're starting to reemerge. So as you get some weakness here, I'd be looking to buy into an AbbVie. I don't think it's ready today. I think most of these bullish charts, I'm kind of showing opportunity. So BABA and these Chinese internet names, this is a group that I highlighted for a few weeks in a row. This was clearly an area that was outperforming everything else, and it's continued to work. But the question is, well, what do we do now? Interesting, the news today was that China was reopening, Shanghai Disney reopening, and so on. And that's been happening. I look at that as that's probably a take profit. What I think is playing out here is more of, you could call this an ascending triangle or a cup and handle or whatever you want to call it. And I would kind of look at it as this is probably a little mini cup, and now we'll form a little handle. So again, I think we come down for a couple of days, and that's probably the re-entry spot is as you fill this gap around 112. So at about 112, I'll give it a look for another bullish dip, but my guess is, again, a couple more days of downside. And then last but not least, Merck, maybe my favorite chart out of the bunch, has the most strength, and it's kind of, picturesque in terms of you've responded to the key level, you're backing off of there. If we do the math on this, usually in a cup and handle, the cup size, the handle will be about 30% of that. So the cup is about 83 at the low end and about 95 at the top end. So this cup is about 12 points, right, in size. Well, what's 30% of 12? If I take 12 times 0.3, it's $3.60. $3.60 pullback from 95 puts us at about 91.40, which is kind of down here where we're hitting. So I think Merck is kind of at where it should kind of bottom out. Any little candle pattern right in here tomorrow, I think you can already start to buy it for that next push. And then interestingly enough, usually when stocks are under 100, this is a big psychological marker, right? Big whole round numbers stand out, and there's a certain psychology and a gravitational pull. I suspect this stock has 100 in its sights. It's kind of like when oil first went towards 100 a barrel, or gold prices first went towards 1,000, or remember the Dow when it broke through 10,000 and they put on the party hats and so on. It's just a big psychological number, and anytime a stock gets towards 100, there is kind of that gravitational pull. So Merck is kind of interesting. On the bearish side, a lot of these types of charts, okay, big bearish engulfing patterns. Garmin, I just think it can continue to stay weak relative to other things, and the downtrend persists. We're still below the downtrend lines. Probably a good potential entry for some downside. I'm not super excited about the downside just because I think there's going to be a little bit more down short term and then one more wave. And I think that wave up could, big emphasis on could, be a sharp wave. Like, I think the next rally could really surprise people and people be caught off guard by it is kind of the take. But you'll notice most of these charts on the bearish side, again, big bearish engulfing. Marriott, I would put Hilton, HLT, and some of these. They look very similar, but just bad charts. I mean, we've highlighted Marriott for a couple of weeks, and if you've been trading that to the downside, that's a gift that's already been giving. And then, again, maybe my favorite chart is betting on NVIDIA to the downside. It's down on its lows, and like a bouncing ball, when you think about bearish patterns, one of the things I like to see is it's like you bounce the ball off the table, and the first bounce is kind of big, and then the subsequent bounces are smaller, and then it falls off the table to the downside. NVIDIA, I mean, if I am bearish and think that the market's going to have a big leg to the downside, I could see getting pretty speculative on an NVIDIA drop and being pretty aggressive with my downside target. This thing could trade to 130 a share from its 160 price in a hurry, in a quick, dramatic fashion. I'm not so sure that's going to happen, but it would be a good risk to reward trade. Maybe a targeted butterfly, something like that. I'm actually doing a targeted butterfly class on Thursday that I'll be sending out to the group. So I think there's more room for a bounce. That's a weird thing to say on a day like today, but I think we should probably set a higher low in the markets in the next day or two. Powell speaks tomorrow. We get core PCE price index on Thursday, and we're just on the cusp of earnings season. You're going to start seeing financials and all these companies reporting next week. So we've got some things going into, I mean, we've got a Fed meeting where they're going to raise by 50 or 75 basis points. But again, remember all this bad news, all these things are known to the market, and that's important. They've had a chance to price them in to the markets. So the markets already reflect a lot of the inflation, a lot of the higher oil prices, a lot of the slowdown, a lot of that has been factored in, and it's why the markets have already been down so much this year. So can we go lower? Yeah, but I'm not so sure it's these factors that would drive that. It's almost like you'd have to get another shoe to drop, something that was unexpected, that's really a problem for the economy, for the markets, something of an unknown, which could loom and could change price action. But otherwise, I think it's priced in. I think we set that higher low and get another wave. That's my take, and that's how I'm going to be looking to position. So on the earnings side, General Mills, Micron, Paychex, Walgreens, Boots, a few companies there, but nothing real earth shattering. Hope you've enjoyed this market roundup. Have a great rest of your day and a great week ahead, and we will see you next time. Goodbye, everyone.